these days, you can find a story almost daily speculating on the state of our economy in America. But there's also things you can look at that are clear indications of what's going on. And that can somehow give you a little bit of insight into what's coming up next. Take, for instance, the earnings call today from United Healthcare, falling below expectations. And then this week, other major companies in America will announce their earnings. So what can we see from those reports? Here's Gordon Severson.
It's a very busy week.
Even though he doesn't have students to teach, St. Thomas economics professor Tyler Schipper is staying busy this week, tracking earnings calls, jobs reports, and another meeting with the Federal Reserve.
A little bit of everything, and hopefully he's going to provide some more clarity to where we're at.
Schipper says right now the economy is basically holding steady. He expects the Federal Reserve will follow that trend on Wednesday when they make a decision on interest rates.
Good money is on, they're still going to hold off in July, but maybe early in the fall we'll see the first rate cut.
So don't expect to see lower interest rates on mortgages, car loans, and credit cards this summer. Many large companies are also waiting to see what happens with tariffs and trade.
This remains a fluid situation.
Polaris is among several companies scheduled to release new earnings reports this week. The company announced sales were down 6% in the second quarter compared to last year. The company's CEO says tariffs could cost the company around $180 to $200 million by the end of the year.
There remains an abundance of uncertainty around tariffs and the potential impact on consumer spending.
Investors seem confident the company can turn things around. The stock price was up nearly 17% on Tuesday.
We're hanging in there.
Schipper says some companies are doing better than others. Investors seem less confident in United Health Group. The company's stock dropped more than 7% after disappointing numbers were released Tuesday morning. According to company leaders, their medical cost ratio, the amount of money they pay out to consumers, is now the highest in company history. Several other insurance companies are also seeing higher payouts, so it's likely many consumers will see higher insurance premiums next year.
Insurance is a huge issue for people.
Schipper says even though many large Minnesota-based companies are struggling right now, the local economy is resilient and incredibly diversified, with large food manufacturers, healthcare, and financial companies in the Twin Cities. As for the U.S. economy,
let's give it a letter grade. I'd say we're in the C. We're passing, but things are chugging along pretty slowly. There are a lot of traditional metrics that still make the economy look good, but think about it as just getting by, just getting that kind of minimum grade that you have not to fail the class and have to take it over again.
Now, by the end of the week, we should have an even better view of the economy. There's the Fed meeting tomorrow, a new jobs report on Friday, and we will also get new numbers from the biggest tech companies like Amazon, Apple, Microsoft, and Meta. We may also get a better view of where consumers are at, with the two major credit card companies, Visa and MasterCard, also releasing numbers this week.
Yeah, to me, of all of those numbers, it's the jobs and the credit reports that'll kind of reflect on us, the consumer, more than the tech industries. Is that something that you and Tyler spoke about today at all?
Yeah, and he was expecting that the U.S. jobs numbers were probably going to hover into that 100 to 150,000 jobs. That's kind of what we've been seeing lately, and he says that's kind of what he would like to see in terms of keeping things going. But we'll have to wait and see what happens on Friday.
Economics, a lot of wait and see. Thanks so much, Gordon. We'll be right back.